Welcome back. Counting down to pre-open. Let's do one thing. Let's go across to Sonal. There's an interesting report from CLSA on Godrej properties. Sonal?
Absolutely, Anuj. While everyone's talking about weakness in the residential segment in the real estate market, Godrej Property seems to be bucking the trend. CLSA says that Godrej Property is their top picks in the real estate segment. They have a buy rating with a target price of 1,024 rupees per share. They say that the company has started nearing its target of launching one new project per quarter in the 4 major markets. And in FY19, they expect them to close the year with 11 to 12 million square feet of launches. That is twice the launches that they did in FY18. The new affordable housing project in Pune has also received good demand. So this shows that the end user demand, at least in the affordable housing segment, is strong. They also see that the good launch momentum is there for Godrej Properties despite the liquidity challenges that the whole sector on a whole is facing. They think that the company is a major consolidation beneficiary because in last 11 quarters, they have actually acquired 22 projects spread over around 46 million square feet. So that is a positive news coming in for Godrej Properties, and that's why they consider it as the top pick. Back to you.
Right, thanks a lot for that, Sonal. And Nishal, you know, the reason for presenting that report is primarily to ask you about your view on real estate stocks. There have been people who are recommending that things have gotten bad enough for the real estate stocks to become buys. Do you like any of them?
So, Lata, we do not cover that space, but I can talk generally about that space. Yes, on the ground, we still do not see much pickup as far as real estate is concerned. And I'm saying basically we are looking at slowdown in a discretionary space like autos. I don't think so. Real estate is also doing much better. But given that we are in a regime where interest rates are going to keep on going down, or at least we believe there is another room for 25 to 50 basis point cut, I think that kind of a scenario, one should be looking at some of these stocks because they have been pounded out of shape for a long time. So if the economy is to do better basically with the interest rate cut in the background, I think these stocks should be looked at. Obviously the top stock out there still remains to be Godrej or Oberoi, or in the south as Puravankara. So I think these are 3 or 4 names basically which comes to my mind at the moment, but we do not cover the space, so I wouldn't be able to specifically talk about a stock.
Okay, Nishal, you know, this month the worst performing sector has been the IT space. So whether it's Wipro, Tech Mahindra, HCL Tech, all down about 1 to 10% this month. Nomura put out a report yesterday where they indicated that the BFSI segment in Europe and UK is seeing a bit of a slowdown right now. Would you buy these stocks on a dip, or would you be a bit concerned about the future outlook?
So, as far as business is concerned, the largest territory is the US basically, and I do not see a much slowdown as far as US is concerned. In most of the spaces, these guys are there. But I think the one overriding thing is been the rupee, and the appreciation of the rupee continues to be there. I believe rupee should be in a positive zone going ahead also. So that would be a concern basically, and I believe that last year, after the cost went up because of outsourcing, if you see most of these companies, outsourcing has gone up because of US reasons, and they were still able to manage their margins because the rupee helped them. This year, I think that's going to be a challenge. Overall, I still believe that there is a good demand as far as the IT sector is concerned, but would I go a neutral on that from overweight? Yes. So we have been overweight on IT sector for a long time, and we have cut our weightage on to neutral, I think, a couple of weeks back.
Okay. All right. Do stay on. Nishal, we have the opening rates coming in. The rupee has opened distinctly weaker, 69.03. Not a whole lot, but this is not worrisome. It's just that the dollar index was touching almost 97, and therefore one should have expected this kind of a reaction. It's kind of across the board. All Asian currencies are a tad weaker, and in fact some of them are weak, almost 1/3%, and this was in line with expectations. The dollar slightly more expensive today, but on stocks actually it's still trying to find its feet. It's in the green importantly, and the SGX Nifty also turned in the green. But specific stocks at the moment, it's difficult to say anything much. I mean, HCL Tech is 3% higher. I don't see any specific reason why that should happen. As well, Jet Airways still showing a little bit of green. Maybe we want to pull out SpiceJet and see if this mild kind of positivity indicated by Boeing is doing anything positive for the airline stocks. SpiceJet, okay. No, actually not much. Today seems to be a day when the market is still trying to make up its mind on individual stocks as well.
Yes, while we wait for these rates to settle, a couple of stocks do deserve mention though. M&M, it has been under pressure after those comments that came in from the management about a slowdown. In fact, in the last 6 months, M&M has gone from 900 all the way to 650, so keep an eye out on that. Bajaj Finance coming in for a little bit of profit taking right now, and on the upside, HCL Tech is the stock that's up almost about 2.5%, so looking pretty good there. Anuj, anything that you've spotted in pre-opening? I mean, for now, it looks like the opening might be a bit flat, holding on to that 11,450 levels.
Yeah, I think yesterday's high and yesterday's low are the reference points. Normally on expiry day, you don't chase stocks, Sonia, because, you know, there's very smart option writer on the other side who's selling options to you for a reason. So that's why you avoid it till at least 2 p.m. when the option value is down to almost nothing. Then perhaps you take a trade. Otherwise, you stay out. I think just keep an eye on a couple of these names. Kotak is interesting. That's seeing a bit of a bounce back for last 2 or 3 days. Also keep an eye on Z Entertainment. It's struggling somewhere around this level. But let's see if that builds on at some point.
Even NBCC?
Yield, I mean, bonds are opening a little higher. Yields are slightly lower. That also is usually NBFC bank positive.
Okay, NBCC is the other one, right? They've received a fresh order of about 1,000 odd crores. So NBCC is looking pretty good, up almost 2.5%. But Nishal, before we let you go, I just wanted your thoughts on how to approach a stock like M&M now. I mean, it's gone from 900 to 650, and we were talking about a slowdown here. But for long-term investors, do you book out or do you still keep the faith?
No, I think most of the auto stocks, sorry for that matter, I think whether it is M&M or I was just looking at Hero Honda, it hit a 52-week low and it's now available something like 6.5 times EV to EBITDA. These are stocks basically which are now getting traded at the same valuation as most of the commodities. So I think long-term investors, I think this is a very, very good time to actually start accumulating these stocks. I don't believe that a two-wheeler or in that case for M&M, the growth is going to be less than high single digits. So I think volumes are going to come back. This is just a cyclical downturn basically, and the stocks are so cheap. So I think this is a good time basically for people to accumulate these auto stocks, especially insurance companies and long-term mutual funds.
Okay.
All right, Nishal, we leave it at that. Thank you so much for joining us and taking us through your views on individual stocks and on the market as well.